Welcome. This is My Favorite Mortgage Podcast, a newer podcast out that gives buyers and sellers a behind-the-curtain look inside the home buying journey. I am Jaimie Booth, a licensed loan officer in Arizona and Texas, and we have my returning, soon-to-be, let's just call it, co-host, Zee Salcinovic.
Thank you so much for having me back on.
Good morning.
What are we going to discuss today?
You know, I had some topics in mind.
Okay.
But first, I'm just going to loosen us up. What do mermaids wash their fins with?
Soap and water?
Tide.
Ah-ha-ha. That's a good one. Yeah. Got me.
So we're both licensed loan officers.
Yes.
And we work out of the same office.
Yes.
And we have been dealing with higher interest rates.
It was a really rough patch. The rates are, as you said, at record highs. These are spooky times, but nonetheless, that really does not change our marketplace.
No, people still need to buy and sell homes. Life still happens.
Yeah.
Changing jobs.
I mean, exactly. The organic sort of market will not stop. The regulars, are still buying. On my way to work at 8 a.m., I got a call from a first-time home buyer. They need to buy. Their lease is expiring. These are the sort of real situations of how, the mortgage in the marketplace.
Right.
And so people are in need of houses, and they will buy at 8. And, when time comes and when rates come down, we will refinance them again, and they will lose, a couple $100 in monthly payment.
Right.
The whole scenario will look a lot better.
Yeah.
Yeah.
And I wanted to chat with you because I had a recent transaction, first-time home buyer, down payment assistance, FHA loan, and the seller's agent was very adamant, and he said these words exactly. I don't want to have to pay. We don't want to pay for the buyer's buy down, for the rate buy down.
Okay.
And my question was, why not? Like, we are allowed to use seller concessions to pay for closing costs, which includes a rate buy down. Why would you not want to work together to help with affordability, to help with a first-time home buyer? I understand that there's, reason to, get your seller the most money, but we came in a little bit higher so that we could make this mortgage.
To get that. Okay.
Right. Okay. And so the way that he presented it was like stubborn, like we're not going to do that. And I thought to myself, in these kind of times, we all need to come together, buyers and sellers, to make affordability. Otherwise, this is not 2021. You're not going to have, 15 offers and sold in 4 hours and things like that. What are your thoughts on that?
So I like to break those down into kind of numbers. So let's use a nice round $400,000 number, and please don't hold my feet to the fire on the precise numbers here. But for instance, let's just say we have a seller that agrees to give concessions.
Right.
In the grand scheme of things, where those concessions go to is rather irrelevant.
Right.
If they want to help out, they want to help out. If they want to get the max dollar, that's just what they want to do, and that's okay. To be kind of focused on one specific aspect, you could also say, well, I don't want to cover the closing costs of this person, but I'll give a concession, or, I don't want to cover.
Or I'll reduce the price.
Yeah. But here's the thing with respect to what you just said, and this is just maybe, the human aspect of our situation right now. Why not just all help each other?
Right.
And so, for instance, let's just use a round number, $400,000. And we have somebody that's willing to give a $10,000 concession to their home buyer.
Right.
And if you stick that money into a,
temporary buy down.
Well, let's talk about reducing that purchase price by $10,000. That's about $60 to $75 a month.
Right.
But if you use that $10,000 to buy down that rate, now that entire situation changes.
Right.
Now we're talking a couple $100 plus a month.
Right.
So in the grand scheme of things, let's all help each other, because
where
that money is allocated, if allocated correctly, could mean a lot.
Right. It could be the difference of getting your home sold or not.
Exactly.
Because I need a certain interest rate to be able to get the payment to fall in line. And if the interest rates climb overnight, now I'm not getting them pre-approved for 400, it's 380. So in the, grand scheme of things, or the grand picture, is we need sellers to also understand that these interest rates are hindering a lot of people.
Yes.
And $10,000 can go a long way, especially in the 2-1 buy down.
Absolutely. Absolutely. It is the difference between qualifying and not qualifying.
Right.
And I'm going to make a statement now that I would imagine that other loan officers can all relate to. A year ago, we had people that do not longer qualify at this very moment. They just do not. And we have people today, if rates continue to climb, will no longer qualify.
Yeah.
That will depend on the seller's contribution towards buy downs, towards easing that payment via rates.
Yeah. And I would also say, realtors, I would task you to really help your sellers understand that there's programs out there like FHA. I feel like FHA has become more and more popular because it's, a little bit better interest rate. The mortgage insurance this year, right? Those went down, so it made a lot of buyers, in when we're doing the difference from a conventional first-time home buyer to an FHA, a lot of times that FHA is looking like a better deal because
right
of
now, absolutely. The rates are better. The mortgage insurance component is quite a bit cheaper, and FHA, once again, has become quite a viable option for people returning into the real estate sphere. For first-time home buyers all over again, it's a good option.
Yeah, and it's there are some rules with it.
Yeah.
We have a 90-day flip rule that we need sellers to understand. If you are just venturing into the world of renovating a home and flipping it, FHA has a 90-day flip rule where we can't order an FHA case number until day 91. So keep that in mind if you are fixing and flipping. Maybe just understand on your listings that FHA can't go until day 91.
That's a good point. It's one of those that
little rules
you need to know in advance. There's a component there where if you increased, the value between the time that you purchased the home and the time that you're selling it, or just about doubled it, you need to be aware of that very rule. It's a big deal.
Yeah, and then there's also rules when it comes to the house safety components. Dry rot, negative grade, those things always get called out on
Deferred
FHA.
Maintenance.
Yep.
Yeah.
But again, if you're selling, please know that FHA is going to become, or already has become, more and more prevalent as interest rates continue to increase. And we just have to work together to help keep the market going. And the 2-1 buy down is something that's become extremely popular. And remember, we've had that for years.
We've had that for years, but it is, it's very cyclical. When rates are good, it disappears. We all kind of,
we don't need it.
Yeah, and then when rates, go up, all of a sudden, the renewal classes, this is how you do one, by the way.
Right.
And they become seriously
Popular
good
again.
Tools in situations like this, where we can kind of. What it is that we really want to do is make that home more affordable for this time, in the hope and anticipation that rates will come down and people ultimately will refinance out of it to a more favorable rate.
Right. Because when we say we're at a 20-plus year high, that just goes to show over the last 2 decades, rates have been lower.
They've been historically really, really low. I mean, I'm sure we all know a realtor or a mortgage banker that said, I used to sell them at 13 or 15%.
Yeah.
And those were the signs of the times, and these are our times. So for us, high is quite high.
Right.
Is we're operating at 8%, and with higher home prices, it all kind of compounds.
Yeah.
And then again, to what it is that you open up with, we all need each other, sellers, buyers, to understand what it is that's going on. That, a concession here and there can go a long way to make that home a lot more affordable.
Right. Right. VA is another one
Yes.
that we're seeing more and more of, because on our side, government-backed loans tend to have lower interest rates.
Yes.
So I've been talking about FHA, but VA, which you know is my absolute favorite loan, and that one is starting to really make a comeback. And I love the fact that sellers are more open to VA loans, where in 2021, 2020, it was tough to get someone to accept a VA loan because they saw the zero down payment as a weakness.
Yeah, they did. They did. I see quite a few of government loans, FHA, just like we discussed, and VA ones. They're coming back to be same sort of acceptance and quality within sellers' eyes, if you will. It's quite a statement, but like you said, there was a time where people were afraid of government loan appraisals. Deferred maintenance. Am I going to have to scrape paint or put up fencing around the pool? These are all sort of DIY weekend jobs that people have to take on just by taking on a buyer that is coming with an FHA or VA loan. But now they're coming back, and what was once a weakness right now is acceptable, I suppose.
Well, I want to touch on something because we were talking about this last week.
What is it?
You said a statement, and I was like, I started to kind of inquire more. You said you love, and you were like, love USDA loans.
Yes. So I love USDA loans because I find them to be a bit easier. The competition on those homes isn't as much. And then, of course, they come with a lifestyle that I kind of like as well. So, we were laughing the whole precedent. We were talking about really expensive organic eggs.
Yep.
So
you get a USDA loan. There's rules that it's got to be rural.
Yeah. So they're the only loans, or pretty much, that is a location specific loan, and they're a loan that is for the rural aspects or the rural parts of a county. Generally at the outskirts of town, in farming communities and things as such.
But you don't have to be a farmer.
You do not have to be a farmer. You do not have to work in the agricultural sphere. You can commute. It's, for instance, for us here in Arizona, there's parts in Green Valley that are applicable to the USDA loan, and they're a great product. No down payment needed. Very minimal sort of fees that come with that specific loan.
No down payment.
Yeah, let's just say that again in slow motion. No down payment, which is a big deal these days.
Yes.
And generally those sort of homes come, again, with that lifestyle. At least that's how I see them. Rural home, lots of elbow space. You can have all of your pets, that crazy
Billy
barking
goats.
dog. And you can have chickens, so you don't have to, pay for those $7 organic eggs.
But there was something very interesting that you made a point of that I didn't even figure out or even know. You mentioned that USDA is geared to grow a town. So
USDA loans, again, their component is the component where you're purchasing in an area, a rural area. Well, the urban scape is growing. And so that USDA approved area, those towns, those locations are shrinking, or rather they're moving out further.
Right, okay.
And so what is a rural area today in 2 years might be part of town. So I always thought of USDA loans and approved areas as kind of sort of self-destructive because the town grows.
Right,
and
you get
so,
what'd you say? You get the gas station.
You get the gas
hospital.
station, you get the clinic down the road, you get the Dollar General. Before you know it, places like KB, they're building down the road.
Right.
And so town is always growing, the urban chunk.
And without the USDA, getting people out there
is tough. You have to understand it's either, who will live in a USDA area. So now, as of late, we have the post-COVID work from home crowd,
right?
Which is great. So if you're in that crowd and you're okay with commuting into town for chores and things like that.
Costco runs.
Yeah, you go Costco runs and go to the mall and do a concert here and there. that is a great option for you.
You said bus stops.
Bus stops, yes. So population growth pulls in infrastructure as well of, which bus stops are part of. You know, before you know it, that one intersection that didn't even have a light there, all of a sudden there's a gas station, there's a bus stop, and
a McDonald's and a Mr. Car Wash.
Exactly.
Yeah.
Exactly.
It reminds me of Rancho Sarita down south. That was USDA for forever. Do you know that they have now remapped it and it is no longer USDA eligible?
So USDA has moved out further.
Yep, because it did exactly what you were describing. It was very rural. No one lived out there. It was a far drive. And now you've got huge communities. You've got planned unit developments. You've got restaurants. You've got a Target. You've got all of these things that I would say 5 years ago, well, maybe more, maybe 10 years ago, it didn't exist. But the USDA was eligible. So people were buying homes with no down payment out there. And now
that's a perfect example right there.
It's too big to qualify. It's a full-blown town.
Too many people.
Its own school district, its own everything.
Yeah.
So when we were talking about that, that's what it reminded me of, because we just got the maps updated and Sarita's no longer. I mean, there are like further out, but that was a guarantee. We could do USDA with that zip code, and now it's grown. So great way of putting
and that's a great
perspective.
Thing.
Yeah.
And that's a great thing.
Exactly.
Because it is the desirability, the other people wanting to buy your house aspect that drives the price up.
Right.
As well.
Right. Those houses are expensive now.
Yes. And in fact, I know exactly what you're talking about. It's a wonderful area to live.
Yeah. It's got its own kid splash park and a man-made lake that you can fish on. So it wanted to stay rural. It tried.
But this is how things go with respect to desirable USDA areas.
Yeah.
They cease to be that way because they are desirable. Other people want to live where you live. They see in the area, in the neighborhood, what it is that you see, and so it's inevitable.
Yeah. So, folks, if you have any interest of living not so much off the grid, but away from, neighbors on top of you, and you want those chickens or...
Yeah, don't pay $7 for organic eggs, guys. Just get a USDA loan.
Just buy a house, get your own chickens. Just be careful of coyotes, because you got to have a pretty good chicken coop.
Yes.
But thanks again for Zee for coming on and sharing how much you love USDA loans. It's something that I don't do a whole lot of. So when we were talking yesterday, it was great information that I learned myself, and hope that you guys out there learned about why USDA is important. And if you have any questions on getting pre-approved for one of these, please reach out. You can find us on all social media platforms and streaming. And you could also reach out to our email at myfavemortgage@gmail.com, and we can hook you up with getting pre-approved. You can also just click on the link below. That'll take you right to all of our information. Zee Salcinovic, both ways. I don't know.
It's fine.
He's used to both.
Yeah.
Like his first name, he just goes by Zee.
Zee works.
Yep.
Yeah.
I heard you talking, saying the last letter in the alphabet, that's my name.
That's it.
That's how you do it.
That's me. Just remember me that way. Yeah.
Well, again, thank you so much.
Yes.
Do you remember when it was like 6 and we were freaking out?
I remember when we just got into the 6s and people just put on their brakes hard.
Mm-hmm.
And I have some of those same people talking about, man, I wish the 6s were around.
I know. Me too.
Yeah.
God, a good 5 right now.
Yes.
But we can only control what we can control, and that's where we need sellers to kind of help with your listings. Seller concessions will make or break your listing and get it sold. So.
I couldn't agree more with you. I think seller concessions are kind of the key in successful transactions these days.
Yes. And folks, just remember that when it was crazy, seller concessions didn't exist.
No.
We didn't have that for years. So you had to come up with your closing costs, all your closing costs. So it's a double-edged sword. We want lower interest rates, but once those interest rates dip,
concessions will go away.
They'll go away, and then what did you call it? It's like a pack of wolves over the one house that's available in that area and that price point. So
I think if we're to lose a whole percent in interest rate and we are to come down to the high 6s, low 7s again, so many more people will be reintroduced to the market as viable buyers.
Yes.
And competition over our already low existing inventory will become fierce again. You know, with that, of course, concessions will go away and bidding and things like that.
Yeah. Well, I would say if you want a deal, do it now. Get the seller concessions, do a temporary buy down, refi later. And if you have any questions about just what your numbers look like on how much of a home you can afford, it is no obligation. Please reach out. We will be happy to run some numbers for you. Again, thanks to Zee for coming on, and we're going to see more of you, hopefully maybe as a co-host type of role.
Okay. Are you asking me just now on camera?
Yeah. We're going to just ask it. That's it. Just come on every week. I mean, our offices are right next door, so.
I'd love to.
Okay.
Yes.
All right. We're going to finish out with some dad jokes here before we go.
Oh, you have to read them because now that you put me on the spot, and I have voice, most of my dad jokes are not very appropriate.
All right. You ready? Here's some dad jokes.
All right.
I'm beginning to think that I have terrible posture. Call it a hunch.
You should read that hunched over, actually, and then go, call it a hunch.
I asked my chiropractor what kind of music he listens to. He said mostly hip-hop.
Oh, ha.
Or hip-hop.
Hip-hop.
How much does a rainbow weigh?
A ton?
Nobody knows exactly, but it's pretty light. What type of magazines do cows read?
I don't know.
Catalogs. Okay, last one.
Right.
I tried to remember what they call a coffee with ice cream in it.
Iced coffee?
But affogato.
I forgot. Is that it? Is that what it's called?
Is that how I pronounce it? An affogato?
I don't know.
You know what? It is, because I heard a lady order it in a restaurant once, and I thought she wanted an avocado for dessert. But it's an affogato. It's ice cream and coffee.
There you go. In all these years, you thought badly of her.
Yes, I thought she was saying avocado.
Yeah. Okay.
But I affogato too.
Yeah.
All right, that's it for dad jokes. We will see you next time, and hope everyone has a great day. My Favorite Mortgage on YouTube, myfavemortgage@gmail.com, and we'll see you next time. Bye.
Bye.